Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, actually Wednesday, Hump Day. Sorry about that. Wow, I'm losing track of the days of the week already. It's Hump Day, and it's December 2nd. We got a couple economic news released to go over today. And remember, the big one will be Friday for the jobs numbers that the Bureau of Labor Statistics come out. That'll be the last jobs numbers report before the Fed. Next FOMC meeting on December 15th and 16th. So that would be an important date. But today we got the ADP employment. These are not always what translate to what the Bureau of Labor Statistics comes out, but these are the private jobs numbers that they came out with. And we had October 196,000 new private jobs. November it bumped up to 217, which is a good number right there. So it's the first time we've seen that in a while, over 5 months. Productivity was also good for the third quarter. The previous reporting had at 1.6 and was supposed to go up to 2.2, and it came in at forecast. So good overall number on productivity. Unit labor costs went up a little bit more than they anticipated. It was up at 1 point. Last reporting was at 1.4. It was supposed to dip down, and it actually went up to 1.8. So unit labor costs gone up a little bit. So that's something to watch for possible inflationary numbers, as we've been kind of struggling with inflation. That could help us with inflation, maybe bump up inflation a little bit. Later today, we'll have the Fed Beige Book about 11 o'clock Pacific Standard Time or 2 o'clock East Coast. The Fed Beige Book, this kind of give us an insight to the Fed's thinking as to the possible rate hike coming ahead, as well as maybe any patterns of what they're going to be looking for going afterwards as to possible rate hikes in 2016. So they're going to be, that'll be once and if they raise those rates December, that will be the next question. What will be the pattern to make them drive more possible rate hikes in 2016? Today the stock market's a little mixed. The Dow and the S&P are down today. Nasdaq's up. Nasdaq's getting a couple good news return as far as some of the high-tech stocks from like Alphabet, which is also formerly Google, to Netflix and Amazon and stuff like that. So some good stuff coming out from those companies, which is driving up the Nasdaq, whereas the other two indexes are down. Also later today, Janet Yellen will be giving a bit of a speech today, so there'll be everybody will be listening into what she has to say. Tomorrow she'll be meeting with the congressional, giving a testimony to Congress tomorrow. So again, that will be all eyes and ears will be on Janet Yellen tomorrow. But today she'll be giving a bit of a speech, and they'll be looking for any hints as to the FOMC meeting upcoming event in a couple weeks here. Bond market, we had a huge rally, as you can see, and as I stated yesterday, we had all the way up to the 200-day moving average, which we pretty much hit, very close anyways, yesterday, the 200-day moving average. So that becomes a pretty strong floor, ceiling of resistance, so it could be very difficult to reach that. So we hit that. Today we're down about 22 basis points from where we left off yesterday. So we had a nice rally yesterday. So if investors did a price improvement yesterday with that nice little rally, then they probably have worse pricing this morning coming out of the gate. If they didn't, then they probably price that into it. So a lot of people didn't price improvement. As you can see, usually they'll have like this little mark here that they'll do a rally. So usually anytime there's about 12 basis points, they'll kind of show some price improvements. But they may not have done that. They'll probably just figure they'll price it into today. So most likely rates are probably a little bit better today compared to yesterday. Primarily because, as you can see down here, we started off down here and worked our way up. So we had a huge rally, about 31 basis points, actually over from when we left off yesterday. So from here, 31 basis points, and here we had quite a bit, even more. So nice day yesterday, and a lot of that was a result from the Fed purchasing mortgage-backed securities as well. All right, folks. So again, it's a little confusing, but today pricing's a little bit better, even though you see this here and we're lower from here. If you price it from where we left off yesterday, pricing is worse. If you price it off, if they didn't do any price improvements yesterday, we're better than where we left off, where we started the day yesterday. All right, so hopefully that makes sense for you guys. I hope you guys enjoy your day, and we'll see you guys tomorrow. Thanks for watching. Take care.